what's good, everybody? Welcome to the Doe Show. Happy Tuesday. Hope you're having a great day so far. The markets are having a great day. We will talk about that, of course, in a closing beat. But if you are an active trader, a day trader, then today's what's known as a trend day. So if you're following the stock market today, it's a trend day. It's one of those days that maybe we could talk about later, but it's where you don't bet on anything going down. You bet consistently to the upside. You're slow and steady and everything's good. Well, we're talking about that because this week on the Doe Show, we're dropping all retirement. We're dropping all personal finance. We're dropping everything else besides active trading. That's what we're talking about this week. So yesterday, we did trading plans. What to have in your trading plan, just getting a general sense for beginners of how you need to have a plan if you're going to be an active trader. You can't just throw out stocks willy-nilly and pick things that you like. You got to have a plan for when things go up and things go down. I hope you'll check that out. And today we're going to talk about the different options that you have, not the product, but we're going to talk about the different choices of things that you can trade. How does it work? And more importantly, what do you do with it once you pick things like that? So we will cover that, of course, today. Now, I should point out, we are not active traders here at Jazz Wealth. We are long-term retirement investors, fiduciary SEC registered investment advisors, and so our focus is on the long term. We do have a lot of customers that are focused on the short term and do like trading for the engagement to stay in the markets and know what's going on. They use their personal wealth accounts to do that while we manage their retirement accounts. If you have a retirement account, you'd like to transfer over to Jazz Wealth and give us a shot, or you're starting fresh, that's okay too. Go to jazzwealth.com. I hope you'll check us out. Our portfolios and, of course, everything's on our website, along with the classes that we have for our customers. We do need to update that, I think, and add a few more going into the rest of the month. Okay, so let's get started here. Like I said, yesterday we did trading plans. Part of a good trading plan is going to tell you what you're going to trade. We said that sort of at the beginning of yesterday's class. And one of the things we talked about is, what are you looking for? Are you going, we're defining your strategy. What is it that you're looking for? Meaning, is it a technical pattern? Is it a news event? Is it following social sentiment? That's very popular these days. If that's something you're going to do, that's what you're looking for. Now, once you get there, how are you going to trade the individual things that you come across? And most people say, well, I'm going to buy the stock. I'm just going to buy the stock. I'm going to short the stock, if you're familiar with that. And they go, that's my game plan. I'm going to use a chart. I'm going to use social sentiment to identify whether I want to buy or sell. Then I'm going to pick the stock and I'm going to buy and sell that. So certainly stocks are the most common choice when it comes to either day trading. Well, I'll say they're the most retail choice when it comes to day trading or when it comes to active trading. Now, most of you know this one, but you see where I'm going with this. Stocks, they move in cents, okay? So for the most part, every cent that a stock ticks up or down means you make a profit or loss of some amount. Basically, if you buy 100 shares, it moves up a penny. How much did you make? Come on. I know it's delayed. If you buy 1,000 shares and it moves up a penny, you obviously make more every single penny that it goes up or down. Excuse me. I knew I had to cough. Excuse me. Anyways, pennies. We all get that, right? If for every share it goes up a penny, you make a penny. For every share it goes down, you lose a penny. The more shares you have, the more pennies you make, the less pennies you, or the more pennies you lose on the way down. This one's pretty basic. So we're going to buy in terms of shares, and I'm just giving you the definitions here. I'm not trying to, I know you guys probably get this. So we're buying shares, and the shares will change price in penny terms. So that's how that works. Now, as far as stocks go, nowadays, you can buy in any increment you want. You can buy, say, 1 share, you could buy 100 shares, you could buy 50 shares, 23 shares, it doesn't matter. You're not forced to buy or sell a particular amount. You can even buy fractional shares. All of our customers here at Jazz Wealth, when we invest for retirement, our funds have hundreds of stocks in them across the board. And so if someone starts with $50 in their account, we're able to diversify that across all the funds by buying fractions of shares. So they may see that they have 0.157 shares of a particular stock or exchange traded fund, and that's acceptable when you're trading stocks. Now, here's the thing. Stocks can be expensive, right? You guys know this if you're experimenting right now or if you're an active trader. So as the market gets better, of course, stock prices go up, which means you pay more. If you want to buy 1,000 shares of a $10 stock, find a $10 stock, first of all, that you want to trade. You need $10,000, assuming no margin or anything like that. If you use margin, which we'll talk about, is that tomorrow? That's tomorrow. We'll talk about that. If you use margin, maybe you need $5,000, $2,500, $1,000. Either way, you're going to need a significant amount of money just for one trade. So stocks are the most common. They are the most retail, meaning most people know what it means to buy and sell a stock. However, they can be very expensive. And out of the group that we're going to talk about today, they are the most expensive, gross, without taking margin or anything into consideration, any kind of leverage. Tomorrow, we're going to talk about leverage actually for trading, whether it's day trading or active trading, and we'll use these different products. So that's stocks. Examples of stocks, if you're not familiar, Adobe, Netflix is coming up today with earnings. We'll be talking about that later. Johnson & Johnson, Ford, you get what I'm saying there. Okay, so that's stocks. Next up is options. Options are becoming more popular. Some would argue that they are almost as popular as stocks. I disagree with that wholeheartedly. But options are another product that you can trade. You can actively trade options. You can day trade options on the right symbols if you wanted to. And so you can be as active as you want utilizing options. And what options are is a derivative of stocks. And so we should probably do a whole class on this one time, but basically an option gives you the right to do something with a stock if you're a buyer. If you sell options, you have the obligation to provide stock possibly to someone should they want to take it from you. So options are a little bit of a complicated thing. I have a really easy way to explain them and sort of break it down for you guys up. Maybe we could do a class or something, but options are just another way. Now, most of the time, people will combine these. When you're developing your trading plan, you may say that I'm going to buy a stock with certain patterns or some reason that you want to buy it with the sole intention of making X percent for a profit. When I do have X percent for a profit, I'm going to then use an option to try to increase that profit. And so that combination is certainly acceptable when you're developing a trading plan. Now, options trade in increments as well. It depends on what you're looking at. The higher the strike price or the higher the actual option price that you're going to trade, it may trade in nickels. But for the most part, they trade in cents. That's really the point I'm trying to make here, is that they trade in cents, whether it's 5-cent increments, 1-cent increments, whatever it may be, depending on what you're trading. That's how you're going to measure success or failure. Now, you are going to trade in terms of contracts. They are not called shares anymore. In options, they're called contracts. And so you're buying one contract, selling one contract, buying 10, selling 10, whatever it may be. And because you're trading contracts, you have to do a minimum of at least one. So there's no such thing, well, I don't know if Google still has the mini options yet. So maybe if someone that knows, is more familiar with me can tell me, does Google still have mini options, and maybe Amazon or something too? I don't think that lasted, but you have to trade in terms of one. So one defines something here. So if you say, I bought one call contract, let's just say, nobody says it that way, but let's just say you bought one option. That one option is equal to 100 shares, right? So it's not like you own one share of the stock, you actually own or are utilizing 100 shares, but we call it one contract. So think of every contract representing 100 shares of whatever happens here, whether you're a buyer or a seller. So that's a little different. You can't have a half of a contract. You can't have a fractional amount of a contract unless the company splits, which is a whole rare thing. If the company's bought out or split, then there could be a temporary moment in time where you have a fractional amount of contracts, but I'm too much. Okay, so that's options. Again, when you're developing your trading plan, or if you're active, you certainly can do this. It used to be that it was popular to day trade Apple options when Apple was like $500-600 a share. I think some people still do it on Netflix and Amazon. Tesla was popular for a while. I haven't done that in a while, so I can't say for sure. But these can be combined. So options are a derivative of stocks, okay? Next, let's go to futures. So futures are a whole different animal. And every time people would give me grief about trading crypto and Bitcoin and all that, all the kids that were like, you got to buy some crypto, man, I always said, grow up and trade futures like everybody else. Why would you trade something that is not proven and you have no idea what's going to happen when you can go over here and trade something where real people go and trade every day to make money and basically have similar leverage depending on which way you go? Now, futures can be pretty complicated. They are known as, how do you say it? They're less costly than stocks, right? Depending on where you're trading there. However, they're highly leveraged and they're also known as being fairly complicated. So in the regulatory world, no one like me is going to do classes on futures for the general public because it's considered not suitable for the general public. Believe it or not, the regulators tell us that options, number one, are not suitable for everybody, but it's getting better. People are coming around, and futures are certainly not suitable for everybody. And for that reason, I don't do futures classes. Now, myself, every morning I wake up, this is what I trade. I only, well, 99% of the time, this is what I trade. My retirement accounts, I play right along with our customers, but for my active trading, I only use this for a number of reasons. One of them being I can't have a conflict between what I do for customers and what I do for myself. And since none of our customers trade futures, there is a distinct no conflict of interest there, and I like that. So for futures, you should know that you can trade them actively, second by second, right? If you want to, they're very active. You can trade them more in a longer term view if you like. You can pretty much do anything you want with them. Now, futures are a little bit different because every product inside of this has its own way of doing things. So what I'm going to put here is you are buying contracts, right? Just the same as you would in options. It's known as a futures contract. However, they're going to trade in what's called ticks. So a different thing. That's why I started with cents over here. Stocks trade in cents, options trade in cents, futures trade in ticks. And so depending on the contract you choose is how many ticks each tick is. So let me give you an example. If you trade one contract of what's known as the E-mini S&P, ES, by far, you might have to do the forward slash thing. If you trade one contract of the E-mini S&P, one tick is equal to $12.50. So over here, you could say one tick is equal to a penny, right? For a stock, every time a stock blips is equal to a penny. Every time an option blips, it could be equal to a penny, maybe 5 cents. Over here, every one of these is different. See, there's an E-mini, there's a S&P 500 futures product, a NASDAQ one, there's oil, there's gold, there's the Russell 2000, there's corn, soybeans, you name it. You could trade foreign exchange in futures overseas. You could trade volatility. And so every one of these contracts has a different amount of margin or cash required to trade it, and it also moves in different increments. So it takes a little bit of education there, but basically, in this example, every tick is equal to $12.50. What does that mean? If you buy a future contract, one futures contract of the E-mini S&P, and it goes up 2 ticks, you made $25, and 2 ticks happen like that. So you could see very quickly if you bought at the wrong time and it dropped 4 ticks, you just lost $50. I mean, blink of an eye. So it is very, very quick. You want to know that that is highly leveraged. If you did the same on, I don't know, let's say you're a NASDAQ person, right? It would be the /NQ, and that would be $5 a tick. So a little less active and a little less profit or loss, depending on how you look at it. Okay, so these are all ticks. They're all different. Not going to go into all of them today. Okay, to confuse you a little bit more, you got forex. And forex trades in pips. I've never said those two words so close together, actually. Forex is foreign exchange, and that just means you're betting on one currency being worth more or less than another currency around the world. And so when I was a kid, the family was all in the flight industry, and so I could get on a plane and fly anywhere I wanted for free, basically. And I did that a lot when I was a kid. And one of the things I always thought of, 2 things. One of them was, could I not take dollars, hop on a plane, fly to Madrid or somewhere, cash them in and do something different? I didn't know as a kid that they had the foreign exchange right there in the airports. And so I always was fascinated by that, how I could take money from one country, go to another, exchange it for theirs, make the spread, come back and exchange it and be okay. The other thing I thought of as a kid was, couldn't I just pack a suitcase full of aluminum cans, like Coke and beer cans and stuff, fly to a state that on the bottle it would say we'd give you like 5 or 10 cents, collect my 5 or 10 cents and get on a plane and come back. That's the kind of mind I had as a kid. I'm talking like 7, 8 years old. Because I knew I could fly for free. So it was just a matter of time. How much time was I willing to exchange for that money? Anyways, foreign exchange is trades in pips. And so this can be sort of complicated as well. You will see things like USD versus, for whatever reason, I'm thinking of the Aussie dollar at the moment. And so the idea here is that if you trade this pair or this currency, you're betting on the US dollar to be greater than the Aussie dollar. You're hoping the US dollar gains and the Aussie dollar loses. And you're going to measure in terms of pips. And you're actually going to see things like 1.5443. That is what you're trading with. Remember we talked about this moving in cents, 1 cent increments, 1 cent increments. These are pips. It's going to move in increments of pips. I don't know, I've never said it that way. And so that's foreign exchange. I don't talk much about foreign exchange because I honestly hate it. I hate it, I hate it, I hate it. I lived right next door to the guy that initially set up the forex department for Morgan Stanley. I lived right next to him. He traded forex quite successfully. I tried to do it, lost all the time. So that market does not agree with me. These markets agree with me. This one I very quickly said, I don't get it. I don't know. You know, it's like throwing a football. We can all throw a football out back, but to do it professionally, most of us are not going to be successful quarterbacks. So I realized that very soon. Thankfully, it didn't cost too much, but I don't do a lot of forex discussions. So you've got stocks, options, futures. By the way, you could do options on futures if you really want to get geeky. Forex, you could also do options on forex if you want to get really geeky. And then we have hybrid stuff. This is your crypto. I understand there's some of you out there that are trading the cryptocurrencies. You do have Bitcoin futures. I'm not sure if they launched options on that yet, but you do have Bitcoin futures, Bitcoin Cash. Of course, you know all the other stuff. I don't have to tell you that. And there's also something called binary options. And those have really lost their edge. They're not so exciting anymore. So you know how I say, oh, there's always something. The media is always pushing you in one way or the other to be attracted to pot stocks, cryptocurrency. Binary options came before all of that. And so what that was a way to play forex, to play futures. They didn't get to stocks. To play that stuff, actually they did indices. Yeah. So you could actually make a binary bet. Will gold be higher or lower at this time? Yes or no? And if you were correct, you made some money. If you were wrong, you lost some money. And so that was really the attractive thing for a while. I don't hear much about it anymore. And actually, I don't see any advertisements like I used to, especially on the financial channel. So that's that. Anyways, that's a brief overview of everything you have. And so now the question is, how are you going to trade these? And so there we go. Get rid of that. Let's say you decide stocks are the way you're going to go. You have the choice of using a chart, which they call technical analysis, or you can look at the earnings, like we're going to do a lot today, actually, with Netflix and so on. So technical analysis just means using a chart. Those funny little candlesticks and everything that I show at 5 o'clock, you would make your decision based on that. So if your trading plan said, I look for stocks that do this, when I see that they're doing this on the chart, that's my technical analysis. I am then going to pick the stock and buy it with the appropriate risk and everything like that. You could also be slightly longer term and you could say, hey, I realize it's earnings season. When a stock reports earnings that is less than expected, if it causes a move lower, which I'll identify on the chart, then I will do something with it. Okay, so that's how you're building the plan there. Options, you are not using any form of really analysis on the option itself because it's tied directly to either a stock, an index, an exchange traded fund, or whatever. So your analysis comes from the underlying product of the option, whether it is the index or whether it is an individual stock. I'll give you an example. Netflix reports earnings after the close today. If you felt that Netflix was going to surge higher, you may choose to use options to do that, to sort of limit your risk. Whether that's a good thing or not is a different discussion. So you're not doing any analysis on the option, you're just choosing the one you think is best based on what you think, either from the chart or from your guess based on earnings. Futures, you can use technical analysis, meaning you can use the charts on that one. Very popular. You can also just use simply quotes. A lot of people just simply look at the quotes. They watch it tick. It ticks so fast. They just watch, 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 buy. Watch, 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 sell. And do it that way. It's actually the way it initially started, where you would just yell out prices. Everybody was yelling prices left and right. You would stand there and wait. You'd hear a number you like and you go sold. And you'd point to the guy. He'd point to you. You guys would write down your exchange and it was done. You would then take that piece of paper. You knew what you owned it at. You would start shouting out the price you wanted to sell at. You would shout a lower price, maybe a little bit higher, listen for a minute, shout a lower price. Somebody would say sold. You would exchange, you would know what to do from there and you exchange it. So it could be quotes or it could be technical analysis. Forex is going to be pretty much all technical analysis with the exception of news. Forex is, there's nothing to go on, right? A currency is what it's going to do what it's going to do against another currency until news interjects and pushes it one way or the other. So a lot of traders will use the technical analysis to make their decisions. Because of that, the currencies tend to move based on technical analysis. Again, the idea here is if you're buying a stock because it breaks out above a point, that's your belief. You are really hoping that everyone else sees the same breakout and money comes flying into that stock right about the time that you buy it. So that's technical analysis there. For futures, maybe there's a major support area and an index has fallen to a major support area. You might believe it's support. Your analysis says it's support. However, unless other people believe the same thing as you, it's not going to do anything. You're not going to move a futures market. There's only one time in history a guy did that. Fascinating story. Black Tuesday. So then Forex, technical analysis, right? So people believe in that. When news hits, there's nothing you can do. No technical pattern is going to work. It is basically just going to go crazy because of all the trading taking place until the news settles down a little bit, and then it'll go back to technical analysis, unless that's changed. And I will agree, I don't know everything about Forex because I don't care. I don't like it. Cryptocurrency is going to be all news driven. Technical analysis is sort of tough at the moment, so a little bit hard to do that. And that's basically it, right? So you have these choices: stocks, options, futures, futures options, Forex, and your hybrid vehicles. Now, yesterday, trading plans. How to develop a trading plan. I don't care which one of these you want to trade. To me, the only wrong one is the one that loses you money. So for me, that was the wrong one. I won't trade that one, period. I don't really trade the hybrids, but I will trade any of these. I love them. I live for this stuff. You guys can obviously tell that. And so you want to develop that plan that tells you what to do and when to do it, and those are the products that you can do it on. Tomorrow, we're going to talk leverage. So we're going to go through these products here, talking about leverage, how to use it, more importantly, building on the plan. If you're going to trade, how many times have I said it? You cannot be successful, you will not be successful without an actual plan. Not up here, down on paper, down in a spreadsheet, on a big wall, whatever you want to do. You gotta know your plan, because as you say, I'm going to buy a stock when it goes up $5 and I'll hope to capture the next $5. Simple. Okay, so you put that down. When you buy a stock, it goes up $5, so you get in and it only goes up $4, and you're like, ooh, I feel like it's gonna drop. What are you gonna do? It's gotta be in the plan. When you buy a stock that goes up $5 and then it starts to fall $5, what are you gonna do? It's gotta be in the plan, right? So just things like that you gotta really work out. Adam says he loves options class. Man, I could talk all day about that stuff. I love it. I love it. I love it. It's not too bad. I have a pretty simple way to explain it. How would margin work if you were up with the borrowed money? The longer you hold the loan for margin, the more interest you owe. It's minuscule. It's such a tiny, tiny amount. Nobody even really talks about it. Interactive Brokers is starting to talk about it a little bit in their marketing. But it doesn't matter. If you utilize margin in wherever brokerage firm you're at, you don't get to choose when you'd like to use it and when you don't. It's always on, so yes, you're always paying for it. Did I miss I might have missed a question there. Sorry about that. Doesn't futures have a $25,000 minimum in account? No, not at all. You do not, there's no rule on that at all. Now, so that's the question. Bruce is saying, hey, with stocks, the U.S. government has said you must have $25,000 in your account at all times if you're going to be a day trader. And you go, well, I'm not going to tell them I'm going to be a day trader. If you do, I believe it's 4 day trades in a 5-day period, meaning you buy something, you sell it later. The next day, you buy something, you sell it later. That same day, you buy something, you sell it later. That's 3, and only 2 days have passed. Another day goes by, you buy something, you sell. If you do that one time, you get a warning. You do that a second time, they essentially give you another warning. Some brokerage firms restrict you. I believe on the 3rd time, you are labeled a pattern day trader, and you cannot trade your account unless it's always over $25,000. I should say you can't close, you can't start new positions. So you have to maintain that. If you're at $30,000 and you're day trading away and you lose $6,000, you're going to need to put $1,000 in there, so be careful. But anyways, on futures, there is no day trading requirement. So you can buy and sell as much as you like. Some futures, if you're trading them professionally or at least willing to do a little more research, the margin requirement's even in the hundreds of dollars, and you can buy and sell to your little heart's content. How would one get started to learn about futures and how to trade them? You really just want to get like a Futures for Dummies book. You don't want someone's opinion on strategy. And I can't stress this enough, guys. Whether it's retirement investing, active trading, whatever you're doing, you don't want someone's opinion. You want the facts, the groundwork, the sort of investing 101 sort of thing. Get all of that first. Then you can go look at people's opinions. If you start with a guy that says, I got a strategy, check it out. You buy this, you make $1 million, you're scarred. You're going to learn the wrong way to go about things before you even learn how they work. It's like that with cryptocurrency. Everybody got excited saying, I'm making all this money, and nobody really knew what was going on. Don't do that. Learn what's going on first, then dive in. So with anything, that's going to be the case. Okay? I've often thought, if I wanted to just go sell out and make $1 million right away, I'd take my entire life savings, put together a class where you go travel around all these places. Not the promises of getting you rich, not the promises of I'll teach you how to trade, but I'll teach you how everything works, leaving all the opinions out, and you could buy like that course. But who would buy that? It's not sexy. You need the private plane and the guy with the girl on his arm and stuff. You could learn forex as well. Paper trading on forex, paper trading on anything, I'm okay with while you're learning how it works. If you're working on a strategy, let's say you know how to buy, sell, you know the platform inside and out, you get what a pip is, you know your contract size, standard, mini, micro, all that stuff, and you're comfortable with that. And now you're trying to develop a strategy, you got to do it live. You can't do it paper trading. You'll eventually become a very successful paper trader. Fayad. Cobra, yeah, bonds are in there. However, we're talking about active trading this week, and unless you are right there in the bond futures, you're not really actively trading bonds. So bonds are more of a long-term investment. And that's the only reason I didn't cover that one today. Yep. All right, so tomorrow we're going to talk about leverage with active trading. Remember, we are not active traders here at Jazz Wealth. I'm very worried that by the end of this week, people are going to think we're a group of traders. Not the case. We're long-term investors. But we are focused this week on the Doe Show, just helping you with your active trading, because I realize many of you are actively trading, and I think I can help you improve. If you're one of our customers, I know I can. So I want you to do well with that also. Anyways, we have the closing beat coming up at 5 o'clock. If you want to know when we go live, hit the subscribe button with the bell. That'll let you know when we kind of fire up everything for the closing beat. Huge market rally today, and we have a lot to talk about because I'm not an I told you so guy. I'm an I'll tell you ahead of time guy, and I already told you ahead of time about this one, so we're going to cover it today on the closing beat. And I appreciate you watching. We'll talk to you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.